Okay. Now let's post. Howdy, Casey. All right, done. Right, let's go. All right, so for those who will join and watch, for the few to none, unfortunately, lives are a big problem. Hi, Andrew. But yeah, so not a big secret. Something I've said before that the war will be back on again. And those who've been following and paying attention, similarly to just like before, just like Russia-Ukraine war sort of deal, it actually never died down properly, really. Just was a very temporary, like a week-long quiet before things kind of popped off again. And we're kind of back to square one, really, which was anticipated. In fact, maybe we are progressing to square two. In fact, we're just making fun of it on my Discord with some of my members. Here we go. Noise writing, replying to what I just said, basically how we think that the missiles will start being launched again, at least at us Israel. They've been hitting Jordan, Iraq, and all sorts of places around, so not a big surprise. Yeah. But again, we're here beyond looking at the fundamental stuff, which I post on a daily basis to my members. We kind of see and follow, really. I think we ought to pay attention to the technical stuff, to the technical aspect and element of the price action right now, of the charts and everything. That will really be helpful to really understand where the market is headed. I think those who know the accuracy and how good these tools are predictive should pay attention. I know we spoke about the gap, by the way, 7,533. Those who didn't follow, I actually said how not detrimental this is. This is oftentimes not a causality, and the market is having far more of a stronger bearish momentum and directionality given cyclicality, which is very important. Those who don't know, of course, can't pay attention to cyclicality. You can't pay attention to something you're not familiar with, nor know about in the first place. So really, when you do, you will understand, just as I warned, that the filling of the gap is not really detrimental. It's not the end-all be-all of what the market needs to do. And it's completely normal to see the market skip that gap. Is that certain that we have? Not necessarily. Let's go over the momentum, the directionality, and I mean, so far, pretty evidently, we've been moving lower and lower throughout the day today. Basically residing and revolving around 7,384.45 right there, which was very well known from before. It's not a surprise. It's a very, very well known level. Here it is playing a role as a resistance, and here it is as a support. Basically very well known, technically derived level as well. So it's very accurate. It's not, I think like there's a level there. So tremendously precise. And so right now, given the current channel, the framework where we're working our way within, although there's another channel, we're going to see it in a second on a 5 minutes, it's more of a diagonal now. Well, just as much as this, just a little steeper actually. And given the 1 minute time frame, given how we are roughly about 30 minutes away from the end of the trading session for today, we're probably not going to see a lot of anything crazy going on. Probably we're going to see that price action sort of tumble down towards the bottom right here and maybe retest 7,384.45 again. 5 minutes. 5 minutes, what are we actually seeing is currently still objectively bullish, but about to turn around and turn over, which kind of plays well with what we're seeing on the 1 minute. So that means once, basically in about two and a half minutes, yes, when this candlestick will get locked, and we're gonna be probably seeing a convergence, the crossover of the forces, or the tool that indicates for us where we transition from being more so bullish and more so bearish, where we have a combination of the forces. We actually are going to go neutral because we're going to be bearish and bullish territory, in overbought territory, which implies that there is still significant overall broader bullish momentum happening, at least simultaneously. As you see, we're closing and closing, and it gets even tighter and tighter and tighter while I'm speaking. But all that stems basically from our 30 minutes. As you can see, we are correctively bullish. Corrective, why? Because we're bullish in neutral bearish zone. Neutral because it is below 50. And anything below 50 and 20 is, although generally speaking neutral, still far more bearish than bullish. That's kind of a combination situation where you're going to have both sort of both forces cancel each other out as much as possible, to the point where, although there will be price action and movement, sort of regular ebb and flow, as you may call it, but not a significant change in range where we're moving or residing within. Actually, really, but. And so 45 minutes is objectively bearish, although again bullish right now. As you can see, we are more so bullish right now. Our tendency is bullish in bearish neutral territory. And so, in other words, again, that very same indication, we're basically getting that mixture. That mixture is indicative of us retesting that 7,384 level again and again and again, simply because that's the closest, strongest support / resistance in case we slip below it, will in our vicinity. Now, let's look at the 1 hour. 1 hour is a little bit different. The 1 hour is actually already back to being bearish. In fact, you can see all along this entire recent period, we've been transitioning from a bullish trend. Obviously, quite clearly a steep upwards trend, as you can see, that was going on all the way to here. And now we went sideways. We are kind of in this funnel, or a wedge-like flag. Harmonic pattern, those who are familiar. And we are now still revolving around. And so it's not completely out of the realm of possibility to see another retest. For that, we're going to have to go to the deeper levels of the cyclicality and see whether we actually squeezed that bullish momentum out completely, or do we still have some in the framework. So objectively right now, as you can see, we are more so bearish than bullish. More so on the bearish side of the broader cycle, if you will, broader trend. And really in the 4 hours, this is where we ought to be paying attention, which is closer to our daily again, so we don't feel so discombobulated moving from 1 hour to the daily. We have the 4 hours, which basically dictates that every 1.5 candlesticks, then of course you have post-market, pre-market, culminate in a daily movement, sort of bringing these two candlesticks together. This is what we basically did in the daily move. And so the momentum, it's more so higher level of sensitivity to the directionality is better, is a better tool of indication before we transition to our daily and completely lose track of where we were. We understand whether the inner cyclicality is, inner cycle, if you will, also bearish or also bullish. Remember, the more trends will be aligned in one direction, the more likely we're going to see the outcome of that very direction play out. And the larger the time frame and the more indicative it is of that previous one to play into one another, accommodate one another, really amplify one another, if you will, fortify, whatever term you want to use. Now, here on the daily, actually, this is where we're seeing a little bit of a mixed sort of narrative. It is bullish on the one hand. As we just said earlier, it's in bearish territory below the 50, just above the 20. And in fact, if we pay close attention and we look closer, we realize the two forces are moving towards convergence, basically are pointing in a direction that quite soon, potentially within a day or two, we're going to see convergence or crossover of the forces, which will bring the dominance of the bearish momentum sort of to the forefront, will make it dominant and will be indicative of more directionality downwards, which is again more indicative of retesting that very low of give or take that average. Let's put it right here, right below the level we're residing right now, and potentially the bottom of the current channel we're moving within the framework of. As you can see, we kind of moved from the left side to the right side of the channel while doing this all sort of daily ebb and flow, that noise, let's call it just what it is. Okay, so now here is the interesting part. The weekly, as I warned, is a lot more bearish. And if you think about it, we can have several days, we can be seeing indication of a couple of bullish days, for example, until the end of the week, right? Which we are seeing indication of on the daily chart. But then again, what we are seeing on the weekly increment, you need to understand that we're looking at least a handful of weeks out. Since this week is almost done, we basically have 1 day left, the rest of today's session and 1 day left. And once this culminates, it appears to be that we are accelerating, our downwards pressure is increasing, the bearish momentum is increasing, and in other words, we are far more likely to see within the following weeks a lot more bearish price action, price behavior. And so if this is correct, should be confirmed, or rather this is more of a confirmation of what we would see on the monthly. It's something I've been warning about, that when we run out of bullish momentum, normally we would have that flatter tendency. We do see it quite often. And you see, if you guys remember, those who follow me, follow my community, follow my channel, here all along as we were moving sideways, I've been saying we're going to move down, but I was warning that there will be a correction to the upside, and it was quite clearly evident that it will be strong enough to at least hit the close vicinity of where the highs were. As it started unraveling, we realized that the harmonic structure that I personally thought was enveloped inside this one shoulder is actually larger, if you will. And so what we are seeing right now is the actual, again, because I was looking forward, I was assessing that this very turn would be the turn that we're basically experiencing right now. But there's a major difference. Right now, if earlier before we had any warning signs about this being somewhat of a strong correction, in this case, no, what we're seeing is a strong bearish run, which I know based on the harmonic structure and the cyclicality will result with this head and shoulders pattern. Basically, here it is, for those who want to see what I'm referring to. Here it is in its entirety. I'm sorry I went just left there, I shouldn't have. And the idea of why we think this very area, that 57 all the way to 6,000, 6,100, will play the role of our range within which we're going to be at least testing in the beginning. As you pay attention, I don't think we're going to actually get stuck and sort of revolve around it for too long, as we do understand there should be a shoulder to be had, sort of the equal of this. If you understand the harmonic patterns, you understand there is a shoulder to be had on the right side, and naturally we do expect these to happen on sort of reside on various strong support and resistance levels that we've seen play out before. For example, could potentially be this, could be any one of these major levels we have within that range between 6,441.96 all the way to 6,800 handle-ish. And also we have the 6,666, which we know played a major role, and that's that orange line, or at least the one that right now you see in black, or let's just make it a different color. So let's, I don't know, let's make it green, okay? So it's visible. So as you can see, basically, there is a potential, a high probability potential, in fact, of that very same level that played the role of support, playing a role of a resistance, meaning that very same shoulder that I'm talking about will go all the way to these levels, give or take. Of course, test them revolving around them, meaning, of course, it can cross, meaning we may even see 6,700, for example, and then a continuation downwards, given that harmonic structure. Of course, that is all correct, given if we are exactly where we are, where I think we are, where I analyzed that we are within the cycle. Because if I'm wrong, we're in a completely different place. Of course, if you want to learn and understand the forces, the cycle, the momentum, and all of it in depth, I highly recommend joining my community. It is still highly discounted, so don't miss out. People right now are getting very, very lost and sort of don't understand why the market is behaving the way it does. For example, oil, my members were very prepared for it because we spoke about it multiple times, how energy will play out exactly as it is playing out right now, although most people were anticipating and hoping for oil to go lower and lower and lower. Andrew here can tell you that we actually were very prepared and knew that this very outcome with energy will play out. In fact, we're following other assets, for example, such as Plug, for our own interest and purposes. As you guys, by the way, see, Plug did not react too heavily yet. In fact, it's kind of teetering on the lower end still. Hi, Ray, good to see you. And so, I'm planning to pick up Plug. I'm expecting a very interesting rally on it, although we know right now it is still moving within the framework of a downtrend. Soon-ish, at some point, there will be a significant rally higher. And so I myself am planning to prepare and start accumulating some Plug once this monthly runs its course, and I'm gonna see that basically we dropped to the lows that I think we may see, such as 1.8 on it. I will start on the way down, sort of as we're curving through the bottom, start picking up some of these on the way up. As you can see, we are on a broader cycle, kind of already had it drawn out right here. Pretty much what I think that may still play out is some movement of this sort. I know you're looking at the red stuff. This is another scenario that can still play out, and even if the red scenario plays out and not the black one, I'm absolutely fine with that. That's why I'm saying I'm gonna start slowly DCAing and getting prepared, and all of that will happen once, of course, I see the bearish momentum being purged, so to speak. And that's why it's, I think, following behind, sort of falling behind oil, although oil, as you can see, had a significant rally throughout the day today. Basically rallied all the way from around the lower, sort of higher 80s, around 86, all the way to 93, and now is having a bit of a correction, a bit of a momentum loss sort of minute towards the end of the session. Momentum is falling off the cliff. No, naturally, that's kind of a normal thing, of course, to see. We're basically revolving and moving within the framework of a channel, and so that's quite a normal sight to see towards the end of the session. Now, going back to our S&P, and so what we were seeing right there, if you guys remember, we're just looking at the daily, that very same chart. Yes, let's not get lost. And so what we were saying is that we're having kind of that mixture, that mixed momentum right now, right, on the daily, and on the weekly we are actually significantly bearish, as we said. And so even though in a couple of next following days, well, today, the rest of today and whatever is left, 15 minutes plus post market tomorrow and moving into Monday, we will maybe see some of that bullish momentum that we just saw on the daily being basically squeezed out completely and transition to a far more bearish like narrative on the daily, given the broader directionality we have on the weekly, because the weekly is a broader channel. We're actually seeing the day channel moving within the framework of, again, so if, just to kind of put it simple, if that is the weekly channel, those are the daily channels that we see kind of moving and revolving within the broader channel, which, as you can see, has a clear downwards tendency, at least at the moment, very different from what we had before. Just as I was saying, this is an uptrend, right? Very clear, very steep, and this is a shallow downtrend. Why shallow? Because right now we're losing whatever was left out of that bullish momentum, kind of purging it, and once it is purged, we're gonna fall off the cliff, similar to what you just saw with, by the way, the plug with the other asset I was showing, where momentum falls off a cliff. Now here we're gonna see something that is indicative, basically similar, again, more bearishness. But the time frame, the length, because we're looking at the monthly here, this is far more indicative of a longer period. We're looking at a potential, once this, of course, flips over and becomes more and more bearish when it does. Once it does so, which we know we have less than, well, it says 8 days, but really we have just tomorrow left and next week. So that's just 1, 2, 3, 4, 5, 6, basically 6 days all put together. And well, the last day of the month will be a Friday. Nonetheless, it doesn't mean that it can be a very, very strong momentum-wise day and very, very volatile. It can't quite be so. Irregardless, the broader picture here and something, wink, wink, here we are finally. Something that my members can tell you, those who follow momentum. But Greg, we're in the 3-month, the quarterly was kind of moving parallel and looks like it was about to turn over. Right, that's why it's so important to know about the cyclicality and understand where we are. And when things don't add up, and you got to sort of correlate and connect what you're seeing on the smaller time frames with the larger ones to identify upcoming behaviors. And as I warned you, that the bullish momentum will start collapsing under the weight of what we see in the monthly, weekly, and so on and so on. Those very signs and indications that we saw, far more bearish momentum sort of sipping into the system. Subsequently, all that weight will tug on our quarterly and will break down the bullish momentum and will be far more indicative of a beginning of a very, very prolonged downtrend. Why very prolonged? Because again, if we're on a quarterly, we're not just looking into the current quarter. In fact, we're already looking into potential, well, most likely and most probably into the following quarter, and maybe even into the one that after that. So we're basically looking at a period of a half year. Guess what? That's why these things don't unravel within a 1 day or 2 day or even a week or two period. It takes time to sort of build up and work its way within the framework, within the momentum, and eventually play into the cycle the way we expect, even if the volatility is higher within the minor process. There is a micro process, there's a larger process, of course. The inner processes at times can be very misleading because they are moving up and down, because of that volatility, because that ebb and flow being thrashed around left and right all the time. The bottom line is to pay attention to the larger trends, to the larger cycles, ladies and gentlemen. Okay, that's the important thing. And this is what we've been paying attention in my community and we know about, of course, and this is why me and my members are far more prepared to what is going on right now rather than the vastness of the public and the stock market that are very much confused, running around like headless chickens. This is why I recommend taking the leap, joining my community. It's still very, very discounted. You don't want to join? No problem. Just don't be surprised when shit like that happens and you're like, what the hell is going on? We in my community are completely prepared for it. In fact, kind of making fun of the whole thing. And some of us are even positioned in such a way that while this is happening, we're actually gaining. We're actually, the worse the market is doing, the greener we are. Again, I'm not advocating for that position. It is a very risky, very dangerous, very special position. The more you want to know, of course, you should join my community. I'm talking about these things all the time. It's quite open and transparent with my members. In fact, sometimes, we even make fun of the whole process of how long it takes to actually turn around and flip over the back end, but it is what it is, right? The impatient are the people who get their wealth taken off them and transferred to those who are the patient. In fact, that's kind of a quote, about the market, how the market is a mechanism of transferring wealth, liquidity from the impatient to the patient. So it's all about knowing where the market is headed, not where you think it is. And you got to understand that these channels, these support and resistance levels, this momentum thing that we're talking about, it's not random, it's very accurate. It's not based on gut feeling whatsoever. And as you can see, I've been sort of touting and saying that for quite some time with my members. And so for them, what is happening right now is no big surprise. Of course, covering the geopolitics that ends up being related and correlated to everything. So, I highly recommend joining my community so you will be in the know rather than, running around like a headless chicken when things like this happen, like I said. All right, so ladies and gents, it's all pretty simple. It's kind of me reiterating the same stuff I've been saying in my videos for some time. Of course, in a very accurate way. Because we understand the technical facets of why the market is bouncing off of what supports, what resistances, what are the dynamics of the forces. So as you can see on the screen, and yeah, I highly recommend you all join so you yourself will be in the know. that's it, ladies and gents. I don't think I have anything else to add. Join me, join my members. I'll see you in the community. I'll see you in the next one. Just a bit kind of an update of what is happening for those who are confused and those who want to pay attention and listen, of course. So yeah, that is what I'm seeing, ladies and gents. It is what it is. Like it or not, the market is a beast of its own, and we're just riding it, so to speak. Love you all. See you in the next one. Bye bye for now. By the way, yeah, if you stayed this long, of course, I'd appreciate a like, subscribe, and all that crap. And of course, I want to hear your thoughts down in the comments below. Would be highly appreciated. Much love.